Welcome, everyone, to the Market Chronicles. This is episode 18.
Great to be here.
Today, we're doing a quick, focused, deep dive into some recent commentary from, crypto heavyweights Arthur Hayes and Dan Tapiero.
Two very interesting voices in the space, for sure.
Absolutely. And hey, if you happen to be watching this on YouTube, go ahead and hit that subscribe button for more analysis like this.
Definitely worth it.
So we've got excerpts from a discussion they have recently. Our mission today:
To pull out the key insights, market trends, potential plays, the narratives they see driving things, all condensed.
Exactly. Let's jump right in. Arthur Hayes, what's his current thinking on Bitcoin?
Okay, so Hayes is very upfront about being max long Bitcoin. Says he bought quite a bit between, $90,000 and $74,000.
Wow, okay, so a significant position. What's the plan now?
His strategy now is basically holding that Bitcoin and waiting for what he calls alt season.
Right, the potential surge in altcoins.
Yeah, and when that happens, he plans to rebalance, move some capital into, what he sees as high-quality alt projects.
And his overall market view, still bullish.
Definitely.
Right.
He believes the bull market isn't over, and that $74,500 was basically the recent bottom.
Interesting. He also talked quite a bit about macro factors, didn't he? Specifically Trump's policies.
He did. Big focus there. He's referencing Trump's trade rhetoric from the 2016 campaign, the tariffs back in 2018.
And looking ahead to potential moves in 2024, 2025.
Exactly. He sees these trade policies as, major drivers for reshaping global supply chains and shifting financial flows.
How so? What's the mechanism there?
His argument is basically that the U.S. needs to move from its current deficit situation towards something more neutral.
Okay.
And that shift inevitably impairs capital flows, especially thinking about China.
So the tariffs aren't just standalone things in his view?
Not at all. He sees them more as a symptom, a symptom of this larger bipartisan push towards decoupling the U.S. and Chinese economies.
Right, that decoupling narrative. And he had this interesting point about volatility.
Yeah, this is key to his thinking. He says policymakers, Trump included, are kind of structurally short volatility.
Structurally short volatility, meaning they don't want it, especially in bonds.
Precisely, particularly bond market volatility. And his analysis is that when bond volatility spikes, what happens?
Monetary easing. The central banks step in.
Bingo. You get the money printing, as people call it. He expects this cycle to repeat. Tariffs escalate, volatility spikes, monetary policy responds.
And how does Bitcoin fit into this cycle, according to Hayes?
This is where it gets really interesting. He predicts that during these future volatility spikes, Bitcoin will actually decouple from traditional markets like the NASDAQ.
Decouple? Why?
His thinking is that the need for more money printing, because this whole global financial shift, this expensive divorce, as he puts it, is costly, will just reinforce Bitcoin's value as, a non-state alternative.
Makes sense. He also talked about a shift within crypto itself, didn't he? Something about a fundamental season.
Yes, absolutely, a fundamental season. He believes the market's focus is moving, or should be moving, towards projects with, actual users.
Real people paying real money for real services.
Exactly. Not just hype. He gave some examples, too.
Like what?
Pendle, which is for fixed income trading in DeFi, and Ether.fi.
Oh yeah, EtherFi, with their plans for the cash card, spending stablecoins, borrowing against staked ETH.
Right. He highlighted their focus on getting customers, generating actual cash flow, and, importantly, returning value or profit to token holders. That kind of thing.
So he's warning against certain types of tokens then?
Yeah, definitely. He's cautious about tokens with, super high, fully diluted valuations, but tiny circulating supplies, and basically no real traction or users yet.
So substance over speculation is the idea.
Pretty much.
Sure.
He thinks new narratives will pop up, sure, but ultimately it's going to come back to valuing actual cash flows. He even estimated fewer than 50 projects really fit that bill right now.
Fewer than 50. Wow. Okay, shifting gears slightly. What about traditional finance getting involved? Hayes mentioned Maelstrom.
Yeah, Maelstrom participating in that UPXI offering and also buying Solana for their treasury.
He called these setups financial engineering games, right?
He did.
Yeah.
Basically listed companies providing a way for certain investors, maybe those restricted from buying crypto directly, to get exposure.
Like a wrapped exposure.
Exactly. But he questions the logic for people who can buy the underlying asset directly. Like, why trade a premiumized product if you can just buy Solana or Bitcoin or ETH?
So who are these products for then?
He points to someone like Michael Saylor and MicroStrategy as betting on that pool of institutional money that is restricted, the money that can only invest through certain regulated vehicles.
Interesting take. Okay, one more from Hayes. Government adoption of Bitcoin. Good news or bad news?
He's actually quite cautious here. He suggests governments buy Bitcoin mainly for political reasons, not necessarily economic ones.
Which could mean volatility.
Yeah, potential volatility both when they buy and if they decide to sell. So he advises against getting overly excited about government adoption.
What should the focus be instead, according to him?
Protecting freedom of information and supporting the actual builders and innovators in crypto rather than spending energy lobbying governments to buy Bitcoin.
Got it. Okay, let's pivot to Dan Tapiero. He spent some time talking about XRP, or Ripple.
He did. And he straight up acknowledged it's a divisive asset in the crypto community.
Yeah, the centralization concerns, the initial distribution, it's always been controversial.
Right. But Tapiero highlighted what he called XRP's Lindy effect.
Lindy effect, meaning its resilience, its ability to stick around.
Exactly. How it survived despite, regulatory attacks like from Gensler, getting delisted from exchanges and then bouncing back.
He even mentioned his own history with it.
Yeah, he shared that he actually traded XRP way back in 2012 on BitReserve, which is now Uphold, traded it right alongside Bitcoin back then.
Wow, 2012, that's early.
Very early. And he said he respects its survival and how Ripple itself has kind of evolved into more of a holding company structure within the digital asset world.
Did he mention the potential for an ETF?
He did anticipate a potential XRP ETF down the line. And he also mentioned Ripple's sort of Made in America angle and Brad Garlinghouse being active politically advocating for the space.
Interesting. Why was Tapiero even interested in XRP back in 2012? Was it the tech?
He was quite open about this. It wasn't really a deep dive into the tech back then. It was more practical.
How so?
It was just readily available and highly liquid on that BitReserve platform. Simple as that, really.
Availability and liquidity.
Yeah. In fact, his gold company at the time, GBI Gold Bullion International, was apparently the first one on that platform to let people buy or sell gold using either Bitcoin or Ripple.
Huh. So he was experimenting with it.
Pretty much. He talked about how low the price was, how volatile it was back then. Said his initial use was more exploratory. He didn't have a deep grasp of how it all worked initially.
Did he offer any broader investment takeaways from that experience?
He shared a kind of personal motto for analysts. It's never too late to do the right thing.
Applied to investing, meaning?
Meaning, even if you missed something early on or maybe didn't fully understand it, it's not necessarily too late to reassess and potentially invest if the thesis makes sense now. But he also admitted Ripple's inner workings and balance sheet were pretty opaque back then.
Okay, so wrapping this up quickly, we've got Hayes with this macro-driven, fundamentals-focused, cautious optimism.
Right, looking for real cash flow, watching the bond market, waiting for alt season.
And then Tapiero highlighting the sheer resilience of some older assets like XRP, despite all the controversy, a different kind of perspective.
Yeah, the Lindy effect in action, acknowledging its survival power.
So putting these together, it leaves a really interesting question for you, the listener, to think about.
Yeah. How do you weigh these different angles? Hayes' focus on fundamentals and macro versus Tapiero's point about resilience.
Exactly. How are you evaluating the long-term potential of different crypto assets? And this interplay between TradFi and digital assets keeps coming up too.
And specifically thinking about Hayes' fundamental season, which projects actually stand out to you as having that real substance he's talking about?
Lots to chew on there. We definitely encourage you to dig deeper into these specific projects and the macro trends we touched on.
For sure.
All right, that's our rapid deep dive for this edition of the Market Chronicles. Thanks for tuning in.
See you next time.